Question 121. In India, mutual fund agents' rate and services are at present defined by A. SEBI rules. B. Stock exchange bylaws. C. AMFI rules. D. Convention. Answer D. Convention. Question 122. Along with the application, it is mandatory to distribute A. Investment rebate. B. Offer document. C. Key information memorandum. D. None of the above. Answer C. Key information memorandum. Question 123. To sell funds effectively, an agent need not A. Be fully aware of the important characteristics of the scheme. B. Know his/her client's risk profile. C. Give after-sales service. D. Offer large investment rebates. Answer D. Offer large investment rebates. Question 124. For investors to correctly compare performance of different funds, SEBI's advertising codes include A. Uniform computation of yields. B. Uniform presentations of dividends. C. Identical time periods. D. All of the above. Answer D. All of the above. Question 125. SEBI's advertising code mandate that all performance calculations in a fund's advertisement should be based A. NAV. B. The NSE 50 index. C. The BSE Sensex. D. None of the above. Answer A. NAV. Question 126. An agent's appointment by a fund A. Requires SEBI's approval. B. Is a lengthy and cumbersome process. C. Is mandatory preceded by an AMFI test. D. Does not require any approval. Answer D. Does not require any approval. Question 127. An investor does not have recourse to his agent in case of errors, problems or the quality of the investment. A. True. B. False. Answer A. True. Question 127. An agent can offer and sell a fund's units at A. Any price he chooses. B. A price determined by competition among agents. C. A price based on demand for that fund's units. D. The public offering price currently in effect. Answer D. The public offering price currently in effect. Question 128. All buy orders through an agent do not become valid till the fund accepts and confirms the orders. A. True. B. False. Answer A. True. Question 129. When an agent purchases, offers or sells units, ensuring compliance with applicable regulations is the responsibility of A. The fund. B. The agent. C. AMFI. D. SEBI. Answer B. The agent. Question 130. The terms of appointment of a broker by a fund are A. Laid down by SEBI. B. Laid down by AMFI. C. Not uniform to all funds. D. None of the above. Answer C. Not uniform to all funds. Question 131. The Code of Ethics for Mutual Funds published by AMFI A. Is mandatory. B. Is in the form of recommended practices. C. Is unfavorable to investors. D. Does not cover distribution and selling practices. Answer B. Is in the form of recommended practices. Question 132. The AMFI Code of Ethics does not cover the following prescriptions. A. Adequate disclosure should be made to the investors. B. Funds should be managed in accordance with stated investment objectives. C. Conflict of interest should be avoided in dealings with directors or employees. D. Investors should approve each investment decision. Answer D. Investors should approve each investment decision. Question 133. Distribution and sales practices are only partly regulated by SEBI at present. A. True. B. False. Answer A. True. Question 134. Which of the following distribution channels is preferred by private mutual funds? A. Individual agents. B. Small distribution companies. C. Established distribution companies. D. The Internet. Answer C. Established distribution companies. Question 135. Which of the following sales practices is prescribed by regulation? A. AMFI Code of Ethics. B. SEBI Advertising. C. AMFI's Code for Agents. D. None of the above. Answer B. SEBI advertising. Question 136. In a mutual fund, investors' subscriptions are accounted for as A. Liabilities, B. Deposits, C. Unit capital, D. None of the above. Answer C. Unit capital. Question 137. Investments made by a mutual fund on behalf of investors are accounted as A. Assets, B. Liabilities, C. Capital, D. None of the above. Answer A. Assets. Question 138. Liabilities in the balance sheet of a mutual fund are A. In the form of long-term loans, B. Strictly short-term in nature, C. Combination of long-term and short-term, D. Not allowed as per regulations. Answer B. Strictly short-term in nature. Question 139. Net asset value, NAV, of a mutual fund scheme is defined as the scheme's A. Assets minus liabilities, B. Assets per unit, C. Assets minus liabilities per unit, D. None of the above. Answer C. Assets minus liabilities per unit. Question 140. The day on which NAV is calculated by a fund is known as A. Computation date, B. Valuation date, C. Record date, D. Book closure date. Answer B. Valuation date. Question 141. A fund's NAV is affected by A. Purchase and sale of investment securities, B. Valuation of all investment securities held, C. Units sold or redeemed, D. All of the above. Answer D. All of the above. Question 142. When computing NAV of fund, SEBI requires accrual of major expenses to be accounted A. Quarterly, B. Annually, C. On a day-to-day basis, D. When actually paid. Answer C. On a day-to-day basis. Question 143. If a fund calculates NAV daily, it will include all the transaction concluded up to A. Last week, B. Last 2 days, C. Previous day, D. Today. Answer D. Today. Question 144. For an open-ended fund, the repurchase price should not be lower than A. NAV, B. 95% of NAV, circa 93% of NAV, D. 97% of NAV. Answer circa 93% of NAV. Question 145. For a close-ended fund, the repurchase price should not be lower than A. NAV, B. 95% of NAV, circa 93% of NAV, D. 97% of NAV. Answer B. 95% of NAV. Question 146. For a scheme that has a load, the AMC can charge an investment management fee not exceeding A. 1.50%, B. 2.00%, circa 1.25%, D. 0.50%. Answer circa 1.25%. Question 147. Initial expenses of launching schemes should not exceed A. 15% of amount received, B. 10% of amount raised, circa 6% of amount raised, D. 5% of the amount raised. Answer circa 6% of amount raised. Question 148. Which of the following expenses cannot be charged to the scheme? A. Audit fees, B. Costs related to investor communication, C. Winding costs for terminating the scheme, D. Penalties and fines for infraction of laws. Answer D. Penalties and fines for infraction of laws. Question 149. Which of the following are not true for equity-linked savings schemes? A. Investors can claim an income tax rebate, B. There is a lock-in period before investment can be withdrawn, C. There are not specific restrictions on investment objectives for the fund managers, D. These funds cannot invest in equity. Answer D. These funds cannot invest in equity. Question 150. Which of the following is not true for index funds? A. These funds invest in the shares that constitute a specific index. B. The investment in shares is in the same proportion as in the index. C. These funds take only the overall market risk. D. These funds are not diversified. Answer D. These funds are not diversified.